goodness gracious, to you and everybody live from the vault. 200 episodes. What a milestone. Congratulations, everybody, and great work.
They now have to keep printing or we crash.
We've got this ticking time bomb.
Talking gold with the one and only Andrew Maguire.
Welcome to Live from the Vault.
Hello everyone, I'm Shane Moran and welcome to this very special 200th episode of Live from the Vault. On this landmark occasion, we're diving deep into the heart of the precious metals industry, exploring the truths and uncovering insights that shape our global economy in these unprecedented and historical times. Today we're here and we're thrilled to celebrate not just with one special guest or even two, but we've got a remarkable three experts joining Andrew Maguire to pull back the curtain on the world of precious metals. So first, of course, we've got the one and only Andrew Maguire, a renowned precious metals expert and whistleblower whose analysis have often sparked significant conversations within the global precious metals industry. And joining Andrew, we have the extraordinary lineup of guests today for this 200th edition. First of all, we've got Andy Schectman, the president of Miles Franklin Precious Metals expert, whose deep understanding of the market has made him a favorite amongst our Live from the Vault audience. And then we have, of course, Greg Hemke, founder of TF Metals Report, known for his meticulous research and forecasts in the precious metals sector. And last but certainly not least, we have Rob Kientz, a notable figure in the precious metals discussion, bringing his own unique perspective to the table here. So just before we dive into what promises to be an enlightening discussion on gold and silver, I want to encourage you, of course, to help celebrate this milestone by hitting that like button right now. Just hit the like button. It's our 200th episode here. Share this information, subscribe to the channel if you haven't already done so, and don't forget to hit that bell right there, and we will notify you as each and every one of these episodes goes live. And with our special panel set, and they're ready to explore the nuances of the precious metals market and to discuss strategies and perhaps even reveal some hidden truths about the industry. So without further ado, let's head over to the vault and for this special roundtable discussion with Andrew Maguire, Andy Schectman, Craig Hemke, and of course, Rob Kientz. Over to you, Andrew.
So thanks, Shane, for the intro. And my goodness me, I hope you guys can see. This is a bunch of friends here, and I really do want to get my glass of wine out, some beers out. But I know you guys, it's a bit early in the day for you guys, but
Bloody Mary's work over here at 11 o'clock in the morning, and that works for me. If you guys want to put this on hold, I'll go make myself one. I'm all right with that.
Oh, good. Well, it's good to be, freewheeling here. So perfect. But listen, guys, there's so much. Obviously, we've got at most we've got an hour here because people tend to tune out, even with the likes of you guys, and certainly with me, people want to tune out after an hour. So essentially, look, I'm going to have to start by asking, look, you guys, you're on that side of the pond. This is the biggest unanswered question, which obviously is just parachuted in on us. I really would like to get everyone's take on the Trump victory. I don't think any of us probably have any problem with it. And basically what that might ultimately mean for probably gold and silver once these risk markets, good God. We have to expect this kind of stuff. I can't swear on this channel, but this kind of stuff. But once the risk markets, get on board, that there is an inflationary tailwinds coming into a Fed cutting rates. Hey guys, anyone want to jump in there and give your thoughts on what's this going to do?
Who wants to go first? All right. Well, all of a sudden my box is highlighted, so I guess that means.
Yeah, that's you.
All right. I'll try to keep it short. Andy, as we record this, what is today? The 13th. The term I used this morning in my morning update on my site, I pulled out the old Bernanke Greenspan term of irrational exuberance. And that's kind of what I've sensed over the last 5 days. We've all talked about the debt spiral and the exponential growth of the debt and the deficit. And this idea that Trump and his administration, maybe they can slow it a little bit. Any cutting that, this new Department of Governmental whatever it is, Doge, that Musk is running, may be offset by a loss of tax revenues as we go into a slowing economy next year, and so the net change on the deficit may be zero. But what we've run into is kind of a buzzsaw of factors over the last 5 days. This notion that, again, Trump is somehow going to cut the deficit and promote economic growth. Okay, that means, well, wait a second, maybe the Fed won't be cutting as much and rates need to go higher. And then there's this notion that maybe the Fed, again, won't be cutting as much because of higher inflation, and that means rates need to go higher. You've also got, I think, something that's pretty firmly based, this notion of Bitcoin going higher. But I've definitely sensed over the last 5 days this old trade of, well, let's get out of gold and get into Bitcoin coming back, probably at the fund and institutional level primarily. But hey, look, we've got some gains here in gold. Let's get out of that. Let's get into some Bitcoin now. There's been this storm of factors that has caused a massive pullback. And then you throw on the fact that the cot had gotten very, very heavy. Banks loving to square their books a little bit into the December expirations and before year end, ring the register, fatten up the bonus pool for the Christmas party, all that kind of stuff. You get this inevitable pullback. The only really question at this point, and I'm sure we can discuss it, is, we're due for a bounce. Is this a bounce from all of these factors driving prices so sharply lower? Or is it, the classic short-term bull trap, bear flag kind of thing that leads to even deeper lows before we begin to stabilize and recover? And I'm sure we can discuss that amongst all the four of us.
Yeah, and I think you've raised some interesting stuff there, because essentially what we're witnessing here is the classic wash and rinse cycle. Because on the way up, physically driven stair steps, on the way up, obviously you get the CTAs and the naked longs coming in, and they're rinsable. So that gave an opportunistic ability for obviously into an inflationary environment, the dollar index rising, et cetera, to really just pull the plug and to rinse them out. But they're gone. So really, as far as we're concerned, or as far as, and I'm going to get your opinion, Andy, as well, and as Rob, but what we're seeing here is now it's momentum shorts. Momentums don't like flat markets. They're either on the way up or on the way down, naked long, naked short. And they control 75% of the open interest, the casino chip, so to speak. So essentially, what we're seeing now, in my view, is the momentums building a short position up, which the commercials are taking the wrong side of. Thoughts on that? Maybe Andy.
Yeah, I think what Rob said, what Craig said is spot on, especially the part about the massive short positions that have been bleeding dry. The commercial banks have been looking for a opportunity to square their books, and I've been wondering how the hell they were going to do that in a market that just continued to march higher, and every time they would waste ammunition by hitting it, it would go higher very quickly. And the down days have been very mitigated, very shallow. And so I think this was an opportunity. Look, part of the exuberance, and I like the irrational exuberance statement, because it is in the respect, but it's justified on one hand in that we've all lived through bizarro world for the last 4 years on many levels. And I think people are tired of bizarro world, and they're tired of a country that favors lifestyle over merit and hard work, that favors equality over equal opportunity. And I think we're sick and tired of watching our country and the things that made this country enviable to most of the world, our culture, be whitewashed right out from underneath us. The judicial system, the electoral system, the immigration system, the lawlessness, the wokeness. And it's a breath of fresh air. And I think that has also translated into the risk on trade where, there's no reason to be defensive anymore. It's hope springs eternal, but that's misguided. And I think that's exactly what the bullion banks were counting on and hoping for, and use that opportunity to indeed flush out, the weak-handed money managers that drop the price down below the levels that trigger selling and selling and selling and selling, and they're covering. But to Craig's point, the debt, that's not going anywhere. In fact, it's obviously will probably get worse in a weaker dollar environment with low rates and a weak dollar. That's hugely inflationary. Inflation is coming. The loss of purchasing power is coming, and really what this translates into, which is somewhat concerning for a lot of the country, is again like the Cantillon effect. The wealthy will get wealthier as their assets go higher in price, which ultimately will translate into price inflation as that trickles down into the economy. We've seen this playbook over and over and over again, and pivoting away from inflation or fighting inflation when they're 65% away from their target, when Trump is inheriting an economy where the numbers that he supposedly, or the book, the economics that he is inheriting are far from what we're being told. I mean, inflation is much higher than the 3.5% and that we're being told. Unemployment is much higher than the numbers that we're being told. The economy is in much worse shape. And so, yeah, I think that especially with what happened, I guess, to me, the big thing that I'm most concerned about is, we've seen the rates on the 10-year go higher as they've lowered the front end of the market. And again, the banks are loaded on 10-year treasuries. What we saw happen in Lindsay, Oklahoma a few weeks ago, I find to be a kind of a red flag. And the fact that it's gotten virtually no attention whatsoever by the mainstream is absolutely crazy to me. And, Powell's talked about bank consolidations. I think the banks are massively over leveraged and undercapitalized, and watching rates on the back end go higher only hurts them more. But when the bank in Lindsay, Oklahoma failed, 50% of the uninsured deposits, they're gone. Boom, vanished. When Silicon Valley Bank failed and Signature Bank, they were all bailed out. Hundreds and hundreds and hundreds of millions of dollars. Oprah's money, Oprah Winfrey's money, the tech startup money, bailed out. This little podunk bank in Lindsay, Oklahoma fails, and only 7 million in uninsured deposits, only 50% are returned. The other 50%, I would argue, is the first bail-in this country's ever experienced since the legislation was written, and there's not a word of it on the mainstream. And I guess if I were going to play devil's advocate in all of this irrational exuberance, and I think some of it's justified, I do. I think it's time to be optimistic for getting our culture back, getting our country back. That's a good place to start. The financial side of things, there's a long way. We're a long way from fixing that. But if I were to throw out one concern, it's that if there really is a deep state, if things really are planned, my biggest concern is they're setting up for a fall. That you look at the BTFP, the Bank Term Funding Program, it's over. You look at the reverse repo market, it's almost down to zero. The liquidity is being yanked from the system right at a time when the banks are massively over leveraged and undercapitalized, and we should expect to see long-term rates continue to move higher. That's an unresolved problem. And so while I am very optimistic, and I think it is very optimistic ultimately in an inflationary world to expect metals to do well at some point after this sell-off commences and or finishes, I just think that it's also justifiable to be cautiously optimistic as to how this all plays out before it's all said and done. Not to be the buzzkill. I'm sick and tired of being the buzzkill. I'd rather be optimistic, and on many levels I am, but I don't think we're out of the weeds yet, not even by a long shot. And I think that people should not lose grip on their precious metals. This is what the commercial banks are counting on, for people to shed their positions in metals and make it easier for them to cover their shorts. But this is the time, I think, to really hang tight on your grip and hold true to your conviction.
Yeah, Rob, you're as an auditor, as you know, a proper auditor. What's your? I mean, there's an algorithm going on in your brain, obviously. What is your thoughts here too?
Well, I love the optimism of Trump winning. I think in a political sense, it did a lot of healing for people who felt like they hadn't been represented. Andy mentioned, the cultural and political side of things. The nation clearly stood up and gave the new political class a mandate. The Republicans now own both sides of Congress. They control the Supreme Court and they have the presidency. Now we're going to see what they're going to do with it. I do, the debt's there. We're already way past the point of no return, the 90% of debt to GDP that they talked about, that they figured out during the last recession, 2008. You had Rogoff and I think Reinhardt did that research. That doesn't change. None of that changes. Political seasons, this 4-year and 2-year seasons, don't really change the financial system. The financial system's been heading toward a train wreck since 1913 when we got the Fed and then when we got the income tax as well. Those two things basically ensured financial slavery for the people in the United States. And until those two things are removed, it still will be financial slavery. And the political class can't really do anything about it. And plus, if you look at the spending from Republicans and Democrats, they all spend like drunken sailors. So in my post-election video, I basically said, I'll believe there's a cut in spending when I see it. You show it to me and I'll believe it. As an auditor, you always trust but verify. But I'm in the mode of, I'll trust you when I verify it. I'll trust you when I see it. You show it to me. The American people have been sold a bill of goods. They've been sold a bill of goods for a very long time. And it's time that they wake up and understand what's going on. I think Vivek has been added to that Doge group along with Musk. So it's going to be the two-headed monster there. And I do believe that they will hold to their word and try to cut. The problem is you're going against the entire political class. You're going against more than half of Americans which receive benefits from this system that aren't going to want to give those benefits up. And I'm not making a qualitative judgment on that. At the end of the day, if people are getting their benefits, who am I to say that they shouldn't? But at the end of the day, the system can't turn on a dime because if you do, you bankrupt a bunch of people and a bunch of people probably starve, if I'm being honest. The debt system has to collapse. We still have to have that wipeout. Now, will we get a jubilee? Will something along those lines happen? I don't know. One of the things that came out on Twitter from Finance Lot, who is a great ex-poster, Twitter poster, fully recommend going and jumping on his feed. He pointed out when he looked at the liquidity provided by the central banks, the European, the Fed, the Chinese, and the Japanese, I believe are the four he looked at. The Chinese and Japanese were increasing a little bit. China more than anybody. The European Central Bank and the Fed Central Bank have been pulling liquidity since the second half of 2022. And I think both Andy and Craig alluded to that. Once they pull away the punch bowl, you get the crash. Well, the crash could have happened on November 11th because that was the date at which we hit that trend line of where the liquidity was going to go negative, meaning it wasn't going to keep up with the needs of the economy. The Fed, I think maybe seeing that and reading other data, cut another quarter of a point just before that. How long did the Fed buy us before we have a big banking collapse? You know that bank in Oklahoma was foreshadowing. I don't know. They bought just a little bit of time, but you're not going to convince me all of a sudden everything's green and rosy and wonderful because we have a new president in there, regardless of who it is and regardless of who he appoints to deal with waste. You're dealing with 110 years of waste, and you're not going to get rid of that anytime soon. This is going to take time. And what I've told people, the gold price and the silver price are going down right now. Craig covered why. There's a lot of short covering going on. That was due to happen. We've had consecutive all-time highs in gold all year long. That never goes without some sort of pullback. Just from a technical perspective, the markets are determined by this derivative trade, this paper. It has nothing to do with physical trade. And Andy can tell you that the physical trade's been doing pretty well. There have been some 7-figure buys on the gold market here in the United States lately, and he knows he's a dealer. So there's a little bit more retail, on the top end of the retail level is starting to buy. The derivative price is a paper price. It's a casino. It's a game in which people are hunting for these little bits of profit on each piece of paper that they control in a fractional reserve type of system. And they've got to turn that over. So that the price is going to come down. It never goes up in a straight line. But this has nothing to do with the long-term gold bull market. The gold and silver are in a bull market because we've all across the entire world spent too much, used too many resources. lived beyond our means, bought into that Keynesian fallacy, and that still needs to be cleaned out. And so the people that are prepared, that understand the 7 years of famine are coming, will still be buying gold and silver, enough that they need to protect themselves. For me, it's not about getting rich or anything like that. It's just about protecting yourself. It's insurance. And on the other side of it, yes, gold and silver will be revalued. If you look specifically at Trump, I was at the Bitcoin conference this summer when he announced his Bitcoin plan to buy 1 million Bitcoin, basically inflating the price and then using that to pay off the debt. Essentially, he's pushing dollar inflation into Bitcoin, going to ruin Bitcoin for those who are in Bitcoin. And also you doing it by two things. One, revaluing gold that the Treasury has, and two, using excess Fed reserves, which are there any excess Fed reserves? I don't think there are a whole lot of them. Essentially, you're basically trading that gold revaluation for a temporary reprieve in the debt markets to extend this current system. That's all wrong. So anybody that thinks that Trump understands what money is and understands what fiscal discipline is, just go back and look at what he's doing with Bitcoin, revaluing gold into Bitcoin and trying to buy time for the dollar. The dollar ain't the answer. It was never the answer. It's always been gold and it's always been silver. So I'm not convinced that the politicians understand jack squat about money, or if they truly understand what's going on with the everyday person in the economy. So again, I'll believe it when I see it. And I don't mean to rain on anybody's parade. I think there are a lot of positives that can come from what happened in the election. I think there are tons of positives. But when it comes to the monetary and financial system, nobody that's anywhere in Congress or in politics, or about 99% of them, and we know because we've been doing this in Florida, we've been doing this in New Hampshire as part of Citizens for Sound Money. I'm on the board. We've been doing this in Missouri. We've been doing this in Texas. The politicians don't get money. They don't understand fiscal discipline, and it's not going to happen overnight. So something's going to happen for that to change. And I think that change needs to come from the people. We, the people, ultimately need to change our own futures. And you do that, you start by doing that by paying off your debt, living below your means, buying gold and silver, and then going to your congressman and saying, we want gold and silver back in the system because this dollar system ain't working for us. And we're going to have that debt reckoning. It's going to come. It's only a matter of when. Maybe they bought us some time, and that's great if it bought us time. Listen to this message from all these intelligent people on this podcast and use that time to prepare. But don't think it's not coming. It's coming. I guarantee you it's coming.
That's really interesting. So that kind of keys off. There's so much going on here. I mean, when you look under the immediate chart chatter, which is very short-term stuff, we know this game. I mean, naked longs get on board, get rinsed out, and then we get back to where the physical markets are being settled outside of the CME LBMA ring fence increasingly. And in fact, what was interesting, I thought the Bank of International Settlements data, where we look back and we look at, we take a benchmark. There was 68 tons. They borrowed 68 tons just when the Shanghai Futures Exchange launched. And we believe that this was a strategic wasn't just speculators coming in. I think it was strategic that the PBOC wanted to open that up to actually drive the gold price high. And as those stair steps were built, then of course the physical markets then caught up, physical markets caught up, and so on and so forth. But interesting, by August, the Fed had borrowed from 68 tons up to 157 tons. And then into the top of the range. Since then, they've been short covering those borrowings into the top of the range. And now we're back down to 93 tons. That's a hell of we're talking about a lot of tons here. And they've been short covering into each and every highest part of the range. Yeah, okay, we've got a bit of a short covering opportunity for them today. And we consider that they'll probably continue to short cover. But what's interesting, they are showing a weak hand. We're actually evidencing the Fed demonstrating a weak hand. They're finally having to capitulate. So I guess this beggars the question, well, if the Fed is the only central bank that we know of that is still trying to fight the price of gold, whereas every other central bank, European, Global South, every single central bank is long physical gold. And so they want a higher price, not a lower price. And it helps to bolster the percentage of gold that backs their GDP, and it's all part of a process. So what's interesting is that if the Fed needs to cover these positions, why, crikey, guys, you know very well that the 8,100 tons that the Fed manages on behalf of the Treasury. I mean, come on, it's not even over-the-counter NSFR compliant. It's not even tradable as an asset class because it doesn't comply to LBMA standards. And on the other hand, is it there? I mean, guys, who wants to jump in on this?
I nominate Craig on this one.
Yeah. Craig, you know this story.
Only if Rob tells me.
You've done videos about it, my friend.
I want Rob to tell me how many times he's heard the term "by crikey" down in Texas. What do they say? Americans and the British or English are separated by a common language, Andy, something like that. Anyway, I love to tease you. Again, we're getting at the crux of the matter here, right? I think, and as you were speaking, Andy, it led me to a question perhaps for Rob about this idea of, if they're going to try to revalue Bitcoin versus gold, I think was a term you used. A lot of people, I've seen a lot of folks talk about maybe the Fed needs to revalue the gold on their balance sheet. We've all seen the charts of, this massive move in rates has driven down the value, the price of all of the bonds, the CMOs and everything else that the Fed holds and has built up, over the last 15 years. And with the rising interest rates, the price of those has plummeted, leaving the Fed with kind of a negative net worth. And maybe the only asset they have is the gold that they're carrying at $40 or $42 or whatever it is.
Mm-hmm. Right.
And so as we get deeper into this over the next 4 years, and with, let's say, sound money advocates, maybe like Judy Shelton taking a more prominent role, perhaps in Trump's ear. I wonder if that isn't on the the horizon that nobody's talking about. Anyway, that was on my mind as you were talking about that, Andy. I'll just be quiet and let the other guys talk about it.
I'll pick up where you left off there, and the conference that Rob went to in Tennessee, when Trump spoke, it's interesting. Directly following Trump was the senator from Wyoming, and her last name escapes me at the moment. Loomis, I believe. I think it's Senator Loomis from Wyoming, who came up and said that her idea is to revalue the gold held by the Federal Reserve on behalf of the Treasury to a level high enough to purchase Bitcoin with some of the proceeds. You can't make it up as well, in that all of the central bank balance sheets that hold gold have it in an account called the gold revaluation account. It's the name of it. The head of the Dutch National Bank has talked about this for quite some time, revaluing the price of gold. And, when you look at the amount of gold that has been accumulated throughout all of Europe and throughout the BRICS nations, it would certainly benefit the central banks. It would behoove all of them. Over my shoulder, you got Roosevelt there. In essence, that's what he did when he confiscated gold in 1933. He devalued the dollar by 40%, thereby revaluing the price of gold by 40%. It's something that is being noticed when you see a senator from Wyoming actually say that she wants to float a bill to do that. It is being noticed. You got Jim Rickards saying $27,000 an ounce gold by dividing the gold supposedly held at Fort Knox by M1. You got others that say other things. In a world where Bitcoin can be $100,000, no big deal. Why couldn't gold be revalued to $130,000 and thereby render our $36 trillion debt solvent, offset with the amount of gold that would more or less make that a wash? I guess it could. In theory, the Treasury says any country that wants to deliver their gold to the U.S. Treasury will pay them $130,000 an ounce. Okay. Isn't that what the price is? Yes, it's inflationary. Yes, it's going to have ramifications. But when you realize that we are entering that period of time, Rob alluded to the fact we're insolvent, approaching, I think we're at 120% or so of debt to GDP. Where I come from, those countries way back when, anything over 100% debt to GDP were considered banana republics. And those were usually the countries that had questions surrounding their electoral process, their judicial system, all of the things that have plagued this country. I mean, you could argue we have been toting the banana republic line for quite some time. And in a world where interest rates are rising higher and fiscal responsibility is not, hasn't shown any signs, as Rob says, show me that you're going to cut spending and I'll believe it. I think this is something they notice, certainly, that this is one option to revalue gold to a level high enough to dramatically pay down their debt. I think the BRICS nations would be more than happy with that. And when you talk about whether it be the unit, Project Enbridge, and of course what the BIS did to Project Enbridge is something that I consider to be right out of a James Bond movie. It's more or less espionage at the 12th hour kind of thing. We're going to pull the plug on it. We can talk about that either or not. But I think when you realize that, these countries, whether it be through something like the unit or something that would be traded over Project Agora or Project Cedar, Rob's talked a lot about all of these cross-border payment programs that are issued by the West and by the BRICS. I suggest everyone watch that video that you did, Rob. It was very, very, very informational. You went through all of these platforms and what they could potentially offer. But to me, the common thread in all of it is a marriage between blockchain technology and gold and a new system, and to peg a new system that has lost all credibility to something that inspires credibility. Yes, I see it. It's right here on the blockchain. It's audited independently, continuously, and it's pegged to and backed by gold. The only way you make that work, and that it's interesting, the Swiss had a 40% gold backing way back when. That's the number that the BRICS nations have said in theory they chose. And I think that is something that would work. You put gold at a much, much higher level. You peg it to gold, put 40% gold backing or whatever it is, still gives you monetary latitude. And then Craig brings in Judy Shelton. I wonder if they will nominate her to one of the governor positions. She won't replace Powell anytime soon unless he steps down, as he has, I think, 2 years left. But she is an advocate for the gold standard, and more relevant to me, everyone talks about de-dollarization. Yeah, that's important, right? I mean, the settlement currency, it's important. But to me, it's more along the lines of where's everyone putting their excess? And it used to go into treasuries. And the lack of demand for treasuries, to me, is the real problem. Who's going to finance our debt? Does it become hyperinflation as the Fed is the lender or the purchaser of last resort, or yield curve control, as Craig has talked about forever? These are all possibilities. What Judy says is, well, hey, look, no one of any intelligence would buy our treasuries of any duration. I think they're uninvestable right now, personally. She didn't say that. I'm saying that anything 10-year duration or higher is uninvestable. You're out of your damn mind to do it. But she says, well, we'll just have it redeemable in gold. Well, that's the first smart thing I've heard come out of a politician's mouth in a very long time. So yeah, that would be very, 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 a very, very smart move, I think, and would rekindle demand for our treasuries. But yes, I personally think, and I've been talking about it for a long time, that they will indeed revalue the price of gold. The central banks will, and it will at that point then be tied in some form or fashion to a new currency system. Now, I don't know how far away that is, but to me, there's, the revaluation of gold by the BIS, the massive accumulation. Look at the repatriation of gold. 40 nations have all brought their gold home. Now, the conventional wisdom is that it's because of the weaponization of the treasury market. No one trusts the Bank of England or the New York Fed anymore to safeguard their metal. Look at Venezuela. Can we have our gold back? No, said the Bank of England. No, you can't. But dig deeper into it, and I know that the unit settlement token has been kind of waylaid at this point. We'll see what happens with it. But if you read the white paper on it, it talks about the gold would have been held within the borders of the countries that possess it, would mint their own tokens, and the currency aspect, the 60% currency and the 40% gold, would be held in escrow accounts within the borders of the countries that possess it, and independently and continuously independently audited to protect the integrity of the system. But no central authority, no Bank of England, no New York Fed. It's more along the lines of a cooperative system. Anyways, I don't want to get too far down the rabbit hole, but what I will agree that I do think that is something that they notice. Look, you can inflate, you can default, as Richard Russell always said, either inflate or die. I've talked about finding a villain, Xi Jinping and Putin and OPEC, for dumping the dollar. That may or may not happen. Option 4 is revalue gold to a level that most people think is impossible and peg it to a new system. And yeah, it's an option that I think probably is the least painful of the three.
Yeah, I think everything eventually, all currencies eventually get revalued to gold. So whether or not anybody wants it to, it's going to occur. Even if they try to inflate away the debt and it crashes the dollar, the gold will be the ultimate revaluation of whatever emerges out of the dollar. I think what we have to do is be careful with the options that were presented. And this is going to take some discernment by the people. And that's why education is so important. If we get the central bank digital currencies and they do it, yeah, we do have a gold-backed electronic currency, but it's also run by governments. And whenever governments run currencies, they all look at the gold standard we were on before between, was it the 40s and 70s, whenever that time frame was. We basically printed too many dollars. The Europeans called us on it. They took 2/3 of our gold reserves from 27,000 tons to about 8,000. So when have governments ever, even on a gold standard, adhered to their own rules? And when have they not, that inevitable seduction into overprinting the currency? And can it be done with the central bank digital currencies? Potentially. They think they've designed a 2-tier system, wholesale and retail, to where on the wholesale side, they can keep it, international trade from crashing, and then they can just crash the retail one or reset the retail one. That doesn't really help the people, though. I think that system, to me, speaks more to government control than it does to freedom for the people. So eventually, everything will be revalued to gold. The question will be, will it be for the benefit of the people? Will it be for the benefit of the governments and the international traders? The banks that are going to run that system that make all the money off the transactions and that type of thing. For me, what I'd like to see are private options for a gold currency that also has a digital component, because we're living in the digital age. It's hard to ship coins back and forth, especially without a common unit of measurement. I will say that I can't talk too much about it, but some organizations I'm involved with are setting up a common unit of value and are also setting up digital versions of gold and silver, which are audited. Kinesis obviously being one. There are other options in the marketplace. So a lot of what we would need to go to a privatized monetary system that has rates of exchange set, that has a market exchange set between different gold products and allows people choice, whether it's going to be a physical gold coin, a gold bill, or an electronic version of that, or actually being set up in the private marketplace. And if it's me, I'm opting for the private solutions over the government ones. I appreciate the fact the government knows that to stop a worldwide debt collapse and the greatest depression we've ever seen is to back some currency with gold. And I appreciate they're doing an electronic one. I just don't trust the government's running any sort of monetary system, period, because I've shown in the history they can't do it. And a lot of that is not just the governments, it's the people too, because the people want this and the people want that. And a lot of times we don't have the discipline that we need in our own lives to edify a currency, a government issued currency. So I'd like to see something that is privatized, that allows for options, that allows interchangeability of different products, and is there really for the people. And the last thing I don't want to see is I'm hoping that even if we do get the CBDCs, and that's what people opt for, because that's going to be the government solution. There's 138 projects going on in CBDC right now. 3 of them are live. The other 135 are in process, has been tested. If that's a system that comes out and they marry it to the social credit system, that could be a dangerous game, a very slippery slope into not having any freedom whatsoever. So I would implore people, I know Andy speaks about this all the time. I've seen him on interviews. Go watch his interviews about central bank digital currencies and go watch all the ones out there and inform yourself on them, because they could potentially be very dangerous. And I do like the fact that we're getting back into a gold-backed currency with a digital component and a cash component. But again, I would side with those private options over anything instituted by the government, because governments haven't shown that they're ever in their history, and any government that's ever existed on this piece of rock orbiting the sun, that have ever had any sort of fiscal discipline over any length of time.
interestingly, you talk about gold price revaluation. Actually, it's not so much an event; it's happening now. It's in process, and we see it. And I think because, and I think the point is because the physical price is now being settled outside of the tendrils of the LBMA cartel. I mean, there's cartels in every asset class. And so these guys have had it to themselves for so long. And now the physical price is being settled elsewhere. And because, as you say, correctly say, Andy, when the moment that the BIS revalued gold as a first hit asset class on the 1st of January 2023, the game was over. It was going to be revalued. And so as this gold price revaluation unfolds, and it's unfolding under our noses right now, those solutions you're talking about have to come into play. And interestingly, tomorrow rather, you talk about private partnerships, etc. That Kinesis is just about to launch the NU process in Indonesia. That's a 100 million Sharia compliant members now plugging into this private partnership. These are the kind of things that are really creating the way forward. And I know, Rob, I know you're quite involved with obviously the all these movements to basically, you're talking about a fair price for gold. You're also talking about the future of money, essentially, is what you're talking about here. So I think it's happening. It's happening. So even the Fed, even the only central bank still fighting the price of gold, even the Fed is being dragged by the scruff to do something. And as you say, how that plays out is anyone's guess, because the chances are that 8,100 tons is rehypothecated to some degree or another. It's clearly, why would you not allow somebody to audit it? I mean, good God, if any of my gold was in a vault where they said, I'm sorry, you can't audit this, I mean, good God, of course you take it out. So, empirically, we have to assume there's a problem there. So this is an interesting situation.
Yeah, I do think it's an interesting situation. There hasn't been an audit, I guess, since late 50s. Craig, correct me if I'm wrong. It's been almost 70 years-ish, 65 years since a formal audit's been done. As a former auditor, I can tell you that, look, you haven't done an audit of something in 65 years. You have no clue whether anything is accurate whatsoever.
Not only that, they've turned down requests by Ron Paul to audit it, which makes it that much more suspicious.
Right. So the question then becomes, maybe the reason the Fed is fighting the gold price is because they can't participate equally in the system where the other countries can, especially when you look at China and Russia. China and Russia have their stated gold reserves, and then they have their sovereign wealth funds, which aren't officially reported as central bank reserves. Then the people own it. I mean, if you look at China, I suspect they have 22 to 28,000 tons at least, because gold never leaves their country. Some of it goes to Hong Kong for jewelry, and it goes right back. But the vast majority of gold ever mined in China stays in China. That's either held by the people, the sovereign wealth fund, or the central banks, or maybe some companies along the way. Russia has produces and has bought a lot of gold. Where's the United States? We don't have a clue where the United States lands. And maybe the United States is afraid of, maybe that's why they're doing this whole Bitcoin dollar thing, because because they just want to revalue gold without saying how much is actually there. Because maybe they don't know. I mean, maybe Trump doesn't know, maybe nobody knows, or maybe they suspect it's not there. And it just, the whole situation in the US around the gold and around the dollar just reeks of desperation. I look at people when they talk about it as desperation. And I appreciate the Judy Sheltons of the world and everybody that's saying, hey, we can go back to gold because that's a right way to go. But I want to caution everybody in America to be careful as to, do we actually have it, and what kind of shockwaves is that going to send? If we don't, or like Andy said, it's been rehypothecated, it's owned. Maybe it's been lent out. I mean, we looked at the Perth Mint scandal that we covered the last several years and what happened to the Perth Mint, and they rehypothecated it and they got caught. Their CEO got ousted. But now their government regulator, ASIC, is under the microscope for not regulating that market. And the recommendation by their parliament in Australia has been to reconfigure the regulator. Well, what about the US and the CFTC? Does anybody have any confidence in them whatsoever? Craig has covered them a ton. I've covered them a ton. I interviewed the guy that did all the investigations at Silver Symposium 2 years ago, and they don't have the bandwidth to confirm that the trades are legitimate. And we've had multiple CFTC commissioners come out and question it. There's issues here in America with the markets and with the gold that we suspect that we have. And I think there's a bunch of dirty little secrets and dead bodies buried around the gold trade and around the financial system in America that maybe they just don't want revealed yet. And I think if you're living in America, you don't count on those 8,000 tons. You don't count on them. You, in my opinion, if you're interested in gold and silver, need to research maybe getting some on your own, because if we don't have the 8,000 tons, at least you'll have some in your cabinet, under your mattress, wherever you're putting it, in a vault, wherever the case may be, to offset this reset. The reset's coming. Do you have the gold that the U.S. says that they have, but maybe they don't? I think that's really, if you're an American citizen, that's really the question for you. And you should probably seriously consider asking yourself, what happens if we don't have it? And the stuff hits the fan here with the currency, and we go into some sort of deflationary depression type of event.
Craig, you've got a huge forum out there. I've been following it for years. You've got like such a diverse group of people, from lawyers to just everyday people. What's the kind of a thread you're seeing come through? Obviously there's so much to draw on, but what's really the thread that you see most concerning people?
Monetarily, politically, in what way, Andy?
Well, I think monetarily, really.
Yeah.
I think we're talking about the reset here, and obviously at some point with the gold is being revalued by stealth. There comes a point where a reset has to happen. It just has to. So what point is that level? Is it 3,000? Does it spike up to 5? I don't know. But I think that must be one of the threads you see a lot of questions on.
Oh, sure. And the biggest challenge of the present time is reminding everybody that it doesn't matter if you're on the red team or the blue team. We're all on kind of the losing team in this monetary reset if we're not prepared for what's coming, and so what I've always strived to do on my site was to keep everybody focused on, the fact that we're all in this together, this economic storm, and we got to help each other out. There's no sense in politicizing the events that are coming, because again, as Rob says, you as a person, we can't be sure that the U.S. has the gold. We can't be sure that the U.S. government and the bankers and the politicians will act in a way that benefits, the regular people that we are. And so we have to individually prepare, and we have to kind of help each other individually prepare. And so my site continues to have a lot of those discussions. And again, that's the kind of stuff that I think the four of us have to try to promote as well everywhere where we go. In the short term, and again, look, who am I? I don't even know. Maybe you can't see my name down here, but I always put myself on here as a dope with a MacBook because I'm just this guy out here in the middle of nowhere. I mean, what do I know? Okay. But and what I try to counsel people on, and again, I guess I'll just go back to this irrational exuberance of the last 5 days that I've seen in the markets. The math is the math. Rob kind of stated as much a little bit ago. If Trump were really and the Republicans were really to try to balance the budget and dramatically cut spending, sounds good, and you get a lot of talk about that. But if we were looking at nominal dollars right now, GDP growth of 3%, and you equate that to nominal dollars, and then look at what the current deficit was last year of $1.8 trillion. All of the alleged growth in the U.S. is coming through this deficit spending. All of the government jobs that have been added, that make it look like there's this big, strong labor market. Then we're not even talking about all the liquidity that is created through this deficit spending that keeps all the liquidity, the wheels of all these markets kind of greased. So if it were to actually be, oh yeah, the U.S. government's going on this austerity program and cut spending by $1 trillion and that kind of stuff, the collapse in the U.S. economy that would follow, the collapse in the markets that would follow from the withdrawal of liquidity, just on that nominal basis, is just like nobody wants to really think this through. And then furthermore, as this goes forward, and if Trump were to actually promote austerity, and all of a sudden the economy really begins to slow, what happens with interest rates? And then they turn on the liquidity grease again of the quantitative easing programs. They start, increasing the money supply again, and inflation begins to soar. The buyer's strike that Andy Schectman mentioned in the Treasury market, all of a sudden we're talking 6 and 7% interest rates in the Treasury market at a $2 trillion annual deficit. Now we're talking about $1.5 trillion a year just in interest service costs on a $36-37 trillion. Again, I don't like doing math in podcast form. It's like talking about it on the radio. It's almost impossible to follow along with numbers when we're just talking about them. My point is, we can elect. Personally, I'm thrilled that there's at least some sanity coming back to especially the societal discussion here in the U.S. But this, again, I just keep coming back to that term, this exuberance that somehow the math has changed, that somehow the U.S. government is going to be austere and cut spending and all this. I just think it's not going to happen. It's just nonsense. And so therefore, all these people that are concerned about whether they should continue to own gold, whether they should continue to own silver, whether they should just use this. Look, the math is the math. My friend Brent Johnson has always said, if you believe in the math, then you should own gold. Own it through Kinesis, own it through physical metal that you can get at Miles Franklin. Own physical metal. It is your only protection, your lifeboat in the storm. And again, why did I go off on this rant? Because Andy, you asked me what we talk about. We're talking about at my site. This is a daily discussion for people, regardless of everything else that's going on in the world.
Well, and also just to put a bow on that, when you talk about the math, the Congressional Budget Office is a nonpartisan group, one of the last ones in Washington, who said in 4 years, 100% of the tax revenue goes to pay just the interest on the debt and mandatory entitlement spending like Social Security, which is 70 plus trillion in the hole, and Medicare Part B, 90 plus trillion in the hole, Part D, 22 plus trillion in the hole, government military pensions, all of these off balance sheet things that people don't even talk about, approaching $200 trillion. A trillion seconds ago was 31,688 years ago. So I don't care how much they balance the budget and how much fat they trim. The debt has increased to a level where there's going to be issues of some form, especially as rates rise. This is why everyone says there has to be a reset, because when you get to a point where 100% of all of that revenue comes in just to cover the mandatory entitlement spendings and interest on the debt, well, what about discretionary spending like military? You're going to borrow that money to fund your military to go around the world imposing your will and sanctions and policing the world. It starts to come into begins to become a problem, regardless of how much fat they trim. And that's kind of and I don't want to rain on parades either. It's sad to even say that, but we have reached that point where at some point the bar tab has to be paid. And if you look at the damage that has been done since 2008, the Fed's balance sheet was $800 billion in 2008. It's ballooned all the way up to 9 trillion and now just back below 8. The point of it is that damage, which has created massive distortions in the system, misallocations of capital and resource and price discovery, that's impossible. And now they want to pivot and lower rates again at all-time highs in stocks and cryptos, in real estate. It's just going to pour gas on the fire. At some point, the rest of the world says, well, wait a second, why do we want to sell you our oil or our goods or our services for $1 that's being inflated away, and a treasury market, which has shown great volatility, more so than gold for the first time in 45 years last year. And if we're not on the same side of our ideological viewpoints, well, you might just take my treasuries and maybe even give it to the country we're in the middle of a war against. All of these things have to be calculated and thought about. And, I just think we're too far down the rabbit hole to not expect there to be ramifications. And my question is, I wonder if Trump understands this and understands that, something has to happen. Is he going to be the one manning the ship when this reset happens, or when this debt problem happens, or I don't know. But to think and again, that's why, like Craig, I like the term irrational exuberance. It is irrational.
And Andy, if I might just I don't want to filibuster, but just to kind of square the circle on this deal. First of all, Elon and Vivek, they don't have like a scalpel. Okay. There's no line item veto. Okay. They can suggest things, but let's say they suggest a deficit cut. They're able to trim $300 or $400 billion worth of spending, and it actually happens. Okay. Well, if only government deficit spending is driving economic growth and keeping the economy positive, then your $400 billion in deficit spending cuts are actually going to reduce the GDP and turn it negative. Now your tax revenues are going to fall, and they may fall by $400 billion. And so now all of a sudden you have the exact same deficit of 1.8 trillion that you had prior to these cuts. Okay. And that's where so much has gotten lost in this exuberance over the last week. Nobody's thinking this through. Everybody's, I get out of gold. And again, it's been beneficial for the banks and squaring the books and all these, 2 steps forward, 1 step back stuff that we've talked about for years. But I would beg everybody listening to us, just plunge now and say, okay, that's all, the worst is over, and I'm, going into gold and silver, whatever. But think this through. Okay. Gold and silver are not suddenly just thrown out the window and you don't need them now because of Trump's in the White House. Okay. Think this through, think rationally, and understand, again, the market inefficiency that's been forced upon us over the last 5 days, and use it to your advantage. Okay. I'll stop.
Said. Very well said.
I mean, today, this morning, Bloomberg, we always watch Bloomberg. It's very left-leaning, but anyway, nevertheless, watch Bloomberg. And what was really interesting this morning was there was a leading question from Bloomberg to the head of global asset management for UBS, and he controls he's the co-leader there, and they got 1.6 trillion under management. And they asked him about gold, and he said, we're buying gold. We're buying gold. Furthermore, he added that we're actually swapping US treasuries for gold. I mean, so, suddenly you've got, here's the irony of that, is that when you see the dislocations between, over time, you see the dislocations between bonds and gold, dollar and gold. And the irony of it is that today, just a little while ago, we saw the dollar spike up after CPI. It suddenly went back up again, and all at 1 year highs. And what you see, this automated selling. Oh, hang on a minute. We just need to automate our selling. So, it's a dollar cross. So obviously you're long one side, short the other. So all of a sudden gold gets put on sale, but it's not real gold. This is purely fiat gold. It's not real gold. It's fiat gold being put on sale. And so in the meantime, the likes of UBS, Goldman Sachs, every single central bank as well out there is all on the same page saying, we'll alchemize this and we will take it. Thank you very much. So, essentially it's ironic to see that that reaction is actually being capitalized on. And yet the short-term traders, all the more reason to get short gold. And it's not just the CTAs have pretty much been rinsed out. So now we have the momentum traders with controlling 75% of all the open interest, and they're all in short. But it gives this is at least an opportunity for the plunge protection team to cover some shorts. But it's interesting.
Yeah, I think it's hard for the average everyday person to understand the gold market. The financial markets are always made complex on purpose, because what it does is the money masters at top, the money changers, if you will, are the ones that always profit from that. They're all, but interestingly, if you look at the way that the banks are set up, not only are they market makers in the derivative markets, there's 4 big ones. It's in the Office of the Comptroller of the Currency Report. We know who they are. They also do a lot of the research. So they're providing research, taking positions, controlling positions. It's like they're involved in every, aspect of that. Where along the way does that give the public any confidence that any pricing that we have, and not only in gold and silver, but any of the commodities, is accurate at all? And is it any wonder that the BRICS are now building their own gold and silver like supermarket? Because they have, you've got the Shanghai, you've got the Indian one, you got the Russian one, you got the Dubai one, but now they just announced maybe a month ago that they're building a new BRICS-based commodities exchange. Well, I wonder why. Because, when the pricing is not there, the signals aren't there, the commie doesn't know what to do. And then you get that old Austrian economic malinvestment going on. Too much money's put in the wrong place. We use too much of this commodity and create shortages. Not only that, but I mean, look at Africa and look at these, even the Middle East and a lot of these resource-rich nations, which are plundered, by the powers that be around the world for their commodities, which are shorted on all of these exchanges. And then it's the banks, and in some cases, the 2 biggest economies making all the money from this. There's a complete imbalance in the system, and going beyond the monetary aspects of it, we need freedom in the commodities markets. We need true pricing. We need free markets. That's the only way in which you will see nations compete on an even footing. And it's a lot of this mercantilism and this colonialism that's gone on, but it's just been it's made more sophisticated. You read in the history books this early feudalism or colonialism or mercantilism, and you think, okay, that's easy to spot, but spot it in the markets now. It's so complex. You have to have these advanced degrees to understand anything finance, but it's the same damn system. And it's not fair for all participants. And part of the reset on the monetary system in gold hopefully will lead to reform of the commodities markets. None of the commodities markets have adequate regulation, speaking as an auditor. None of them have legislation that gives them the appropriate teeth to do something and to deter predatory or malicious or malignant type of activity or non-fair trading activity. And if the world's ever going to get to a place where we're not angry at each other all the time for all this exploitation, we got to have fairness back in markets. So I'm hoping, along with whatever the currency reset looks like, we get private solutions, we get freedom there. We also get freedom in the commodities markets and in the exchanges, so that everybody operates from a position of what's our strength, how do we participate in the market? And, I'm okay with giving up a little bit of my lifestyle if that means 1 million other kids in Africa have a chance to grow up and do something positive for the world and have the ability to live a full life. I'm okay with that. I've got way more than I need. I can take that. But all of this colonialism through the financial markets really needs to end. And, I think, that this is under control by the guy upstairs. So, personally, I'm not too worried about it, but I am worried in the interim as we go through all those stages. How do we deal with all this, and who's going to be hurt? And that's really, why I do all my podcasting, is try to educate people and so that they understand what's going on. Because people on an everyday basis, they cannot understand this. We have to explain it to them. We have to educate them so that they can understand what's going on, so that when they're voting or they're talking to their friends, they have some sort of educated knowledge to speak about this and understand what's going on behind the scenes, so that we're not all just controlled serfs on this planet by the financial guys.
Brilliant stuff.
When you mentioned the precious metals exchange that the BRICS want to build, they announced the grain exchange right around the same time. Mm-hmm. And when the gentleman who was behind the initiative of the grain exchange was talking about it, he said, look, we produce more wheat and consume more wheat than the West does, yet we have no ability to control the price. That's all controlled on COMEX. But with the establishment of the BRICS grain exchange, that will change.
Yes.
My point has been for a very long time that they know exactly what we've been doing on the LBMA and on COMEX. There's between 4 and 6 billion ounces short of silver on the LBMA. And there are reports that say that they trade 290 million ounces a day, which is basically the entire 300 million ounce float that doesn't, of the 800 million, 500 belongs to the ETF supposedly. So they're trading the entire float every day, but they go on to say that they're only showing the final settlement numbers, and that the actual trades are up to 10 times that amount. You're in theory trading 3.5 times annual global mine supply in silver per day, every day, and about 2.5 times global mine supply in gold per day. The majority of which these trades, and Andrew, this is your bailiwick, but the majority of these trades are naked paper contracts, which are distorting the prices. I've been saying forever that these countries, and in particular through the sovereign wealth funds, I talked to a founding member of the CME who says you have no idea how big these sovereign wealth funds are, or like the People's Liberation Army of China, when they are importing gold, or when the sovereign wealth funds are buying gold, these things aren't reported to the IMF in terms of how much gold is actually being accumulated by these countries. But what we can say is that they're bleeding down the exchanges. In my opinion, they know exactly what they're doing. They're coordinated, they're motivated, they're sophisticated, they're wealthy, and for the first time ever, they understand this is how you win the game. You stand for delivery. No one ever did that before. Now they are standing for delivery, and doing so in a manner that is beating us at our own stupidity. It's jiu-jitsu, using your opponent's leverage against you. And then at some point, to Rob's point, we will see an establishment, I believe, of an exchange, whether it be, the Shanghai exchange, which takes center stage, or the exchange in Dubai, or the BRICS exchange, one that will install legitimacy. Just one last point. When you look at the Shanghai Metals Exchange, in order to buy trade a bar on the Shanghai Metals Exchange, you first have to buy that bar from one of the 6 or 7 pre-approved refineries. They are then laser etch a number on that bar attributed directly to one certificate. When you look at the West, which has rehypothecated many, 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 many times over the gold and silver contracts, similar to what the Hunt brothers realized in 1980, there is no legitimacy. And at some point, I could see the continued draining of the exchanges to the point where you have a force majeure, or a closing of the ability to stand for delivery on COMEX, or something much worse on the LBMA, and how leveraged things are. So yeah, I do believe that will happen as well, Rob. And I think that they're biding their time using the Western price mechanism. They're not bitching about it. They're the ones accumulating it at this point. But at some point, when no one is foolish enough to sell at those prices, that's when I think you begin to see a transition to the BRICS exchange, to the Shanghai exchange, to the Moscow exchange, to the Dubai exchange, in a search for legitimacy.
Yeah, it's coming. Do you know, all my conversations with Rob, you, Andy, and with Craig, every one of them has also looked at the social side of this, which is really important. And I think, where we're talking about, this is about education, to enable people to take responsibility for themselves. And we all must take responsibility for ourselves, because what we've just talked about here is pretty obvious that we have to. And so really, you need information to do that. So what I hope here, and what I know here, is that when we have these conversations, it really gives one a much better, it gives us information where we all learn something every day, every single day. And then little pieces of the puzzle come in, and a light goes on, and you go, you know what, I'm going to buy some gold. Yeah, I'm going to buy some silver. Because it's the only thing I can actually do to take responsibility for myself. That's the only thing. So you go to Andy, you go to Miles Franklin, you come to Craig, you come to Rob, you come to Kinesis. I mean, there's so many options out there. And so this is really, I think, because this is our 200th episode, and I couldn't have asked for a better group of friends to come and celebrate our 200th episode. And I can't believe it's 200, but bloody hell. But anyway, I just wanted to thank you all for coming. We have to pick this thread up again. I know we've reached a good hour, and I know people tend to want to start fast forwarding stuff. And this is too important to fast forward. So I would really ask that we have another session like this, and really soon. I mean, I'm talking about really soon. And if it fits with you guys, even next time, in a couple of weeks. So thank you for coming. Thank you for bringing your knowledge, your expertise, and giving your time to so that you can help people to make their own minds up. Thank you.
Well, if it matters for the people listening out there, I follow all three of you. I read Craig's stuff every day. I listen to his podcast. I follow everything Rob puts out. And Andrew, I've been following you as well forever. You guys are all at the tip of the spear. And I, for one, am honored to be part of this group and would always love to come back on your show, Andrew, with these guys. But I hope people have gotten something out of this, and I hope that people follow all three of you guys. It would be a foolish mistake not to. I've been, as Rob knows, very impressed with his diligence and his fact finding and his logic. And Craig, now that Ted Butler's gone and God rest his soul, I think you're the torchbearer. You're the one who understands
absolutely
maybe better than anybody. And Andrew, you've been doing this for a very, very, very long time, and you understand the back end of the wholesale market better than anyone. So, like I said, it's an honor, and I hope people will follow all three of you independent of just watching this video. I do, as someone who does. I'm doing 18 podcasts this week, and I guarantee you there's information. That's for real, 18. And I guarantee you there's information I've taken from all three of you in my presentation. So thanks for letting me be part of it, guys.
Yeah, I want to jump in and say Craig has probably the best coverage of the commodities markets on Twitter. Just follow his Twitter feed. I'm in there every single day, and I learn something. The coverage is fantastic. There's always depths and layers to this that I don't understand that he does. I'm constantly learning from him. Andy, I want to say you're a legend in the space. I think your body of work speaks for itself. You're somebody I've followed for many, many years. Very privileged to ever come on the show and to speak with you and to do business with you. And I think, Andy, I've watched you grow as an influencer from someone who was just selling precious metals to being, I've seen you do 8 podcasts in a day. I mean, you're a warrior with this stuff. You're an absolute warrior with information. And I respect the hell out of that. I really do. And I respect the approach. So I'm honored just to be on the program with this group of all-stars. You guys are, a lot of you guys are my heroes, people I've been following for years. So I appreciate being included in that.
Well, and I'll wrap up. First of all, you guys are too effusive with your praise, but I very much appreciate it. And if I might join the mutual admiration club here, you guys, I just can't imagine a world where you guys aren't there out helping the cause. So thank you for all you do. And I'll just wrap up, Andy, bad guest. I should have led with this rather than wrapped up with it. Congratulations, my friend. Mm-hmm. 200 episodes, and every single one has been great. Every Friday morning, I get a notification, reminder that you guys have new content. I put it on my site. Everybody on my site watches it. I know people in my Twitter feed all think it's fantastic. And so goodness gracious to you and everybody live from the vault. 200 episodes. What a milestone. Congratulations, everybody, and great work.
Yeah, congrats.
Bless you guys. And I think in my morning meditations, I bring to mind Jim Forsyth, Ted Butler, every single day, because it is part of the process of getting in tune. And these people will never be forgotten. They live on, and their work is so valuable. But and I'm sure they inspire all of us on a day-to-day basis. Thank you, guys.
Thanks, guys.
Thank you, Andrew Maguire, Andy Schectman, Craig Hemke, and of course, Rob Kientz for another in-depth discussion on gold and silver. And remember, to our entire Live from the Vault community, buy physical. Make sure it's backed 1-to-1 and understand the difference between what Andy calls the casino paper gold and silver markets and the actual physical gold and silver markets. They're not the same. And so don't be fooled. And there you have it. That's all we have for you today on another episode of Live from the Vault. And please keep spreading the word about this channel by hitting that like button right there to help celebrate this 200th episode anniversary. And make sure that you share this information so other people can find out about the channel, and subscribe if you haven't already done so. Now hit that bell right there. You see the black bell, and we will notify you as each episode goes live. And with that, we'll see you right here next time on Live from the Vault. See you then.